What's happening, guys? Welcome back to another Sunday Scan. We've had a very eventful week. Lots of things moving in small cap land, with the large caps, with the index, with everything. So I'm going to get right through it, and I'm running a solo scan today. So we're going to run through a bunch of charts, go over some setups, some things that I was watching in the market, and that we at Investors Underground were watching. And then later on, I'll get into some main watches and run you through a couple of the features that we've put together in IU, just so you can get a glimpse of some of that and how it works in real time. So let's get right into it. The main thing is the SPX, or the NASDAQ, rally back after that big sell-off a couple of weeks ago. And I'll just touch on this really quickly, but we talked about the main factors of why that was happening. You had economic data, you had the Japanese currency moves, you had some things with the Fed, and a couple of other things. And basically, the thought process is if we can identify what are the key driving variables that are taking the market down, once we can see those turn one by one, and now those are, in a better direction, it's no surprise that the market follows that. So the Japan currency moves, they've leveled out. We had some better economic data. The VIX, which was, blown out on that big, crash down 2 weeks ago, that has now leveled out. So just all the factors that led to that drop have started to reverse. And as a consequence, the market is now reversing back up. And, it seems like a wild move, and it is a wild move. It's rallied, however many percent in a week. It's basically retraced the entire dip, but it happens fast. But those key variables are really an important thing to help keep you on track, and to not get too biased one way or the other. We're thinking that, the market has to keep going up or it has to keep going down. It's more, at least for me, just about identifying what are the things that are moving the market, and then getting a read on each of those individual things, and then using those together to get a sense of where the market might go. So the first thing that we're going to look at is just that VIX unwind. And, a couple of weeks ago when we did have that big spike down in the market and the VIX went crazy, and, this is basically a gauge for expected volatility in the near future, whether it's 30 days or there's other calculations that can go into it. But it's basically, as people look out over the landscape of the market, when they're expecting huge amounts of volatility and they need to hedge and they need to do all these things to prepare for that, they'll use VIX as a proxy, or VIX futures. And so you can see after that big blowout day, and that was a couple of Mondays ago, it's just been a steady unwind back to where it came from. And that's really what the VIX does in the absence of any other, scares or any other market moving news that could, cause people to need hedges or other things. The VIX just goes back. It's a mean reversion tool, and it just goes back to a normal baseline, unless the factors that were scaring people and scaring the market were still in place, which they are not for the most part. And then let's get into a couple of the runners from this week. So we had several really key moves, a lot of big percent gainers, and one of them that was pretty wild was this ASTS. And this was a great one. It almost reminds me of the kind of the GME, the AMC type of mean moves. The meme like stocks of, over the last couple of years, but in a new wrapper. And so a lot of the old names like GameStop or AMC, they've really been hit hard. They've kind of been left for dead. And so you still have those shareholder bases out there that are looking to rally behind something. You want something with a decent story. You want, management to seem friendly, and they're talking about not doing dilutive things, and we'll see what happens. But I think it's just kind of a natural thing that a lot of market participants are looking for now. And this just happens to be the vehicle or the vessel that they've been rallying behind for a while. And it always starts out as like the early adopter. Someone identifies a cool story. And then, as it works, and as, 1 out of every 100 of these actually does something over the coming months, then you'll have other people pile on. And it really just gets a movement started. Until, of course, you get it too overextended, either dilution happens or just time goes by, and then they usually kind of go back down to where the ultimate fundamentals suggest that they go. But a great trading vehicle, and we had some really large moves on it this week. And, these are the types where, if you're not familiar with kind of like the whole meme mindset, and how far that these things can go, you can really get into some trouble if you're saying that, oh, this is up too much, it has to go back down, it has to this is unsustainable. It's like, yes, but on what time frame? And if you're looking to short something for a day or a couple of days, and this goes on for a couple of weeks or a month, then this will outlast any short-term bias that people have until the market is ready to turn. So just a couple of interesting notes on this, and we had some great chat room discussion on this ticker. But one of the things that I really like to pay attention to on names like this, and just most names in general, is the volume. The consistent perpetual volume with very little pullbacks, and it's holding those prior bars. That is a sign that supply is very tight. And you might have, whatever demand, whether it's from short sellers who are, forced to cover, whether it's from retail longs, whether there's a fund in there. It just really tells me that when you have increased volume and things are holding those prior bars a lot, that's a sign of supply restriction. And those are not the times to really try to nail a short. Or whether you're using puts or a straight up short sell on something, you really want to wait until that supply and demand balances out. And you can even see over here on Friday, when we had that big gap up move and then the big slam down. And that's something that Nate was prepared for, and several of us were preparing for, kind of that mean reversion trade into a big expiration or into a Friday or a Thursday or a Friday. And so you can see that this ran up. It's been running up for weeks, but it finally had this big kind of blow off top. And, we get to a Friday, it does that high a day clear out in the morning. And then, all those calls that were bought, anticipating this big breakout, once the stock starts to slam down, those calls unwind and it gets back to a baseline. Now, they don't necessarily have to do the enormous flush like we saw with SMCI and NVIDIA back in the day, a couple months ago when those were running, but you can still see significant moves. And I think this had a 9-point, share price move down off of these highs. So definitely some opportunity there. And then it kind of went back to a baseline, an equilibrium, and then maybe it has the next leg up over the coming days or coming weeks. But this is a name that is definitely worth paying attention to in this market. I feel like this is like the leader of some of these meme indexes for the moment. And I think it'll be interesting to see how this unfolds over the coming weeks. CING, this was another very large percent runner, and this one reminded me a lot of another one, and I'll talk about both, but this reminded me of GNLN, and I think that they had very similar kind of moves and similar structures behind them. So I'll touch on CING first, and then I'll get into GNLM. So with these names, kind of the structure behind a lot of these is you have usually a very small market cap, very small float, and then you have a share price that starts to be a big percentage, gapper. And so a lot of people are thinking this thing's going to fade right back down, but they're not either paying attention to how small the float is or how small the market cap is, but they're basically, they're sizing into something that is extremely unstable and extremely volatile. And so I think what happens is you'll have these moves, especially when they gap up during pre-market, where you have a big gap up and it's not on a ton of volume, but then kind of the sell-off, it gets a lot of volume, and you can assume that most of that sell-off or that fade back down probably has a good amount of shorts in there. And so that's all during the pre-market. Big gap up, then the volume comes in, it fades off, and then it starts to grind back up, and then you can have those big moves come back because it's mostly the shorts that are offsides. And if you have a very thin name or like a low float name with not a whole lot of inventory overhead, you can get these big moves. And then the process repeats where people are like, oh, well, this is, now up 300%. And it looks like an even better short, but nothing really about the float has changed. And so it's the same process of walking it back down, going sideways, ramping back up. And it's just doing the same thing day after day. And you can see it's holding these higher kind of lows as the days go on, and until it really has a big blowout and shorts start to get hands off, longs start to get crowded, then you'll have a supply and demand flip happen where you have a lot of people who own it at a high share price, and if it starts going down, they're like, oh, okay, well, now I need to sell out of this at some point, and that's what creates that pressure to eventually fade it back down. But these are If you choose to kind of play these at all, you can play them on the long side, although there are risks with this, especially in very thin names where they can halt up, they can halt down. So you have to size appropriately for that. But then if you're trying to nail it on the short side, then you really just want to make sure that, if you want to play these at all, because the very small market caps are just extremely risky on the short side, but you need to wait for confirmation. And that's usually when you have a giant exchange and then a big flush down and then a rebound. And you can just tell that there's sellers in there by the way that every pop gets sold off. And so at least you have some area to risk off of if you're wrong in that scenario. But if you're on the front side of these moves, they're very thin, they move very fast. You can get into a lot of trouble. And, it's easy to say, how did I get here? This was just $4 or $5 and now it's $18. I'm in, way over my head. And that's just not a situation that you want to be in. So obviously you need to have a plan with any trade that you really make. But especially if you're dabbling in something that is very risky with these low floats, then you need to be on your toes and you need to be extra cautious with all that. Let's just walk through the GNLN setup because it's very similar, just with a slightly different range. But you can see that big, ramp up in pre-market, and then it kind of fades off into the open, and then it starts to creep back towards the highs. And you have a version of a liquidity trap playing out during the day, but it's not so much the volume spikes and then it totally dries up. It's more, it's short crowded. And so there's not a whole lot of long volume or inventory overhead. So if it starts to creep back up towards these highs and it triggers, then you can have those giant moves, and then you can see the same process repeat. Big move, kind of goes sideways, holds those levels, creeps back up, and then you just have another move up here. So GNLN and CING, they reminded me of each other. I was actually messaging Judah about it and saying that when CING started to go, I said this is very eerily similar to GNLN. So it's just good to be familiar with how some of these small market cap moves can work, and especially when you have a hot small cap cycle, these things can run a lot further than you think. So there can be opportunity on the long side if you have stops under key levels, and if you can get in around a good risk to reward area, and you kind of know what you're getting into, and you have to sell as they're ramping up there. But these are ones that you just have to be cautious on both directions. GOVX. So we had Mpox news. It used to be called monkeypox. I think they shortened it to Mpox, and it's just a terrible disease. And there's been a couple thousand cases in Africa and some other places, and so the World Health Organization issued kind of an emergency alert on it, and they've done this a couple times before over the last 2 years. Whenever that happens, there's a couple of names that tend to run, and that's things like SIGA, GOVX, and a couple others, and I think VRAX. And it's just any of these names that are associated with press releases about Mpox or anything like that. That's how you can get like a theme move going. So as opposed to like a traditional small cap runner where it ramps up and is basically on its own press release or its own merits or lack thereof. When you have a theme move, you really have an external thing to all the stocks, and then you basically just have which stocks kind of fit into that theme. And a way that I like to think about it is you have like a pool of capital or a pool of money floating around looking for things that match this theme. And when it finds something, it usually funnels that money into there. And that's an example of how a GOVX really can happen, where these theme moves, as long as there's a driving variable that keeps popping up. So in the case of Mpox, it could be the World Health Organization headlines, or it could be like emergency alerts. And every time there's a headline or a new case or an article about it, that's kind of like sparking the sector further and further. And so they can have a lot more longevity and a lot more range than a traditional move if it's just based on the stock itself. So when you have a theme, that's what you have to pay attention to: a basket of names, and what's the driving variable, and it might be headlines from Mpox. And so you had just a magnificent move on this, and you can see this is a name that's run on this in the past, so you kind of have like a template to follow. It's a smaller market cap, and it's holding those higher lows. And you can see the volume is just getting stronger and stronger as the last few days went on, and it eventually resulted in kind of a possibly a short-term capitulation. But again, you really have to wait for a shift from supply being very thin to they're actually getting some inventory up there. And so that's the way that happens, is that you have people who are long start to chase it higher and higher. And they say, no matter what price this goes, it's going to go higher. And then the price starts to go down, and now they're offsides, and that creates supply. And that's how an unwind can happen. But, until you either have some changes in the headlines or you start to get a lot more inventory up higher on these MPOX names, I think you could still have some moves with that. And SMCI, this was one that I talked about last week on Scan. This was a top watch for a bounce play with the like the semiconductor names, and this one worked out very well. I had a couple of trades on this one and on NVIDIA, but the whole thought process was, the semi sector, it needed some time to reset. With the market pullback, a lot of these names came off their highs, pretty significantly. And I figured that it was time for a bounce. And, it's down a certain percentage amount. The market's turning, and you can just kind of feel when shorts start to get a little bit offsides, and, you still have some merit to these stocks. So, if you have some longs come back in, some investment analysts, giving it upgrades, and the positioning's a little bit too bearish, you can get a pretty good bounce. And, we saw with this, it was over, what was that, 450 or 480 to 640. So these are significant moves in the course of a week or so. And so if you're kind of looking for these things on a longer time frame to line up, then you can definitely get some pretty significant bounces on names like this. And then the last one that I'll go over, I guess second to last one, but NVIDIA, very similar, where my thought process on this was it needs some time to reset, needed some time to kind of work out the dip buyers, and then I'll throw a screenshot up. I think it was on Wednesday. That's when it really started to catch my attention, and I ended up having some trades with calls on this. And so it's more just, it's not about catching the entire meat of the move. It's just having a rough thesis about something. And then when you think that you have a good read on it, and if you're able to play it, you can use a couple of risk levels, along the way, and you can, make a couple of nice trades out of it. And then the last one that we talked about last week was Palantir. And I did not trade this one, but this is, one of those names that's been building for a while. If we zoom out on the 5-year chart, you can see how, this was up at just a very key level, and it's starting to break above that as the market is rallying. So the thought process was, if the market is up, then this is likely to be a leader. Again, like I said, I didn't end up trading this, and you only have so much time, attention, and everything else. So, I pick my spots in the market, and if I'm focused on one or two things and number 3 or 4 happens and I miss it, then, that's okay. I have to focus what I can, with the attention that I have. And it's just always a process of saying, what's the best thing that I could be doing in the market right now? So those are the main names that I want to cover from, the last week and some of the movers in the market. And now I'm going to go over just a couple of things in Investors Underground, and I'm going to show you the webpage and some of the features that they have, and just exemplify how some of the tools and the chat could have been helpful with some of these moves over the last week. So here's the homepage of Investors Underground. I'm just going to run through a couple of the features. You can see down here we have all the watch lists, and so basically every night we have several members of the IU community. The moderators, they'll post their watch lists, and they'll show you exactly what they are looking at and what they're focused on. We'll do detailed write-ups of all of our thoughts, and we'll post, the charts along the way. So these are a very valuable resource. This is something that I like to do a lot, and especially when I'm focused on, my option setups or just kind of the themes in the market, why a setup works. I'll put all of my detailed thoughts down here. And this is really a nice way to connect with the community and just share what I have going on. And a lot of the other moderators do the same thing. And then we've been talking about how many of these tools that we've built out over the last, year or two, and Max has done a phenomenal job doing that. But you can see it, there's pre-market scanners, intraday scanners, after-hour scanners, trend scanners, high of day scanners, low of day scanners, the most active tickers. And, these are just incredibly valuable because especially when you have like a breaking news situation and, we also have like the AI, data kind of like scraping headlines from the internet and then it'll put it in front of us as soon as it pops up. But, you can get breaking news and then you can have something pop up on, the high a day or the low a day scanner literally within a second of it moving. And, you're shaving off time and you're able to get in first on whatever plays are happening. And one of the examples of a time that you could have used that this week was with GNLN. And you can see, okay, so this was on Monday, and about 5 minutes before the market close, GNLN, which had been running, it was up hundreds of percent on the day. They announced an offering 5 minutes before the market close. And Nate was able to alert this immediately. And the reason why he was able to do that is because you had the AI scrapers alert him that there was an offering. It showed up on the high a day and the low a day, especially the low a day as it was crashing. And, we were able to get that, news out. And, if you're shaving off 15 or 30 seconds on something like this, that is, just a massive advantage. And this ended up falling maybe 40% or something from those highs. And so you can just have incredible opportunities with the right technology to really, keep you on top of it. So that was just a great example of how all this tech comes together. And, you can see all the commentary on these names that we're posting throughout the day. And it really just makes, trading more three-dimensional when you're using technology, you're trading with other people, you're getting the latest insights versus just trying to figure it all out on your own and to, really be lagging in a lot of these areas with the tech or with time or with anything like that. So these are just a couple of the advantages of, trading with Investors Underground. And there's a lot more tools in here that we'll go over another time, but I just wanted to highlight a couple of examples of how, trading in IU could really be beneficial to someone, especially this week. And then just before I get back to Scan, we also have video content. We have an educational library. We have midweek study sessions, midday study sessions where, something will be moving and you'll have someone like Stan jump on and just talk about it for a half hour and answer questions and walk through setups. And it's just a fantastic way to connect with the community and to learn, how to trade stocks and to do it alongside other people who are knowledgeable and who do this for a living. So really hope that you guys check out Investors Underground. And, if you're on the fence about a membership, I just, try it. You have the best tools. You have great traders in there. You have an educational library. You have scanners and just, everything to make your job as a trader easier. And it's something that we all use and benefit from every single day that we're in there. Okay, and before we get into the next part of Scan, which is the main watches, I just want to remind everyone that I am not a financial advisor, and these are not buy or sell recommendations. Everything I talk about is for informational and educational purposes only. Now let's get into the main watches. Okay, so the first one that we have on watch for the upcoming week is ASTS, and we already talked about, kind of the concept of the meme-ish types of moves that happen, but when you have names like this, you just have incredible range. And so what I'll be watching for is to see if, over the next week, are we going to swipe up, test these highs and struggle? And then maybe, you get some kind of a failed follow through situation where we start to break down, or if the company announces some kind of an offering or, some kind of news that throws people off. Or is this going to kind of base and, flush and reclaim, flush and reclaim, and do that a few times and then eventually, start to build and then maybe move towards, the 40s, the 50s or something like that. And this is a name that has a lot of option activity on it too. And so I'll be watching the option chain to see, are the 40 strike calls getting volume and then anything else, building up higher and higher. Because when you have these names, Nate likes to say that a name with real volume, a real market, and a lot of people in there, they don't end in one candle usually, unless there's something like an offering. But usually it takes time to really, get a lot of longs in there to get a high average cost on them, and then to get the stock to start to go down. And then you have kind of the bag holders in it, and then you can have the big unwind. But these can have a lot of range, and they can mess up a lot of accounts for people who are trying to short them on the front side of the move. And so, if you are going to attempt something like that, you really have to pick your spots, and then also proactive proactively cover because you don't know, when it's going to slam down and then soak and swipe back up. And so, it's about taking a part of the move until it confirms time after time that, it's a steady trend down. But anytime it flushes here, it's a good spot to either cover into and then either flip your bias to see if you want to try to, ride it long as it builds, or if you just want to wait for your spots on the short side. So I'll be looking for either calls or puts on this. Just depends on how the action is. If it gets up to key levels or down to key levels and it starts to base and build up higher, I'll be looking for calls. But if it's struggling and it starts to act heavy and it's pushing up against these levels and starts to fail to follow through and break down, then I have no problem switching my bias to puts. The next name on watch for me is SIGA, and this is an MPOX name. And this was one that was a little bit unique in the sector because they had really negative news, basically saying that their key product was not effective against treating Mpox. And so that's kind of the entire point of why this thing was running in the first place. But I think what happened is that you had a huge gap down and then you had a lot of shorts kind of get into it. And at the same time as like the Mpox headlines started to, keep coming out and you had things like GOVX running again, I think that this just it got caught up with the sector. And so you had some shorts offsides and the sector was moving higher. So, maybe it levels out here, but if it starts to, swipe up against these levels up here and, start to act heavy, they had very negative news. So especially if the sector pulls down at all, this is going to be the top name for me to play downside. But, higher, better. The higher it goes, the better for right now, because, if it has a fundamental flaw in it and it's eventually going to unwind, then you want something like that to go higher, because then you can eventually try to catch the turn in it and ride it back down. But again, with these theme moves, you need the theme or the basket of names to really agree before you're just picking off one of these to single out for weakness. Okay, the next name I have on watch is Coin. So you had a big market recovery, but you've had crypto kind of lagging. So what I think is going to happen is you could have a situation like what happened with the chip and the semiconductor names, how they had a delayed reaction, they had to consolidate, and then they moved. I think you could have a very similar process unfold with things like Coin. And there's a couple other names like WULF, which had, a disclosure by Stanley Druckenmiller's, a family office allegedly, and then you had a short report. And so it's, had a lot of volatility, but I think a couple of the crypto names are going to be on watch for me for possibly calls if the market keeps going. And I think if this, starts to break above these recent highs, we could have a nice move up to maybe, the 230s, 240s, 250s, if crypto, kind of recovers and Bitcoin rallies. The next name I have on watch is one of the Chinese names. So this is PDD. And we've talked about this over the months, how, China, it just goes through these cycles where it will have some bullish news for a couple of weeks. The names will run up. And then, so far they've just sold off every single time. So while they're running, you can play some of the upside. And I look for the relative strength names. And so PDD is at the top of that list. But whether you're trying to play it long while these headlines come out, that's one thing, but also you can just kind of keep these on radar. And then when China most likely has another issue and these names sell off again, you just make a note of which are the stronger ones, which are the weaker ones, and you can ride them back down. But it's at least good to be aware of the sector. So PDD is on watch on the long side while China is running, and then maybe something like BA will be on watch along with some other names when they unwind, if they unwind. And so the next name that I have on watch is GDX, and this is just a gold mining index. And we've had trades on, copper and gold before, and the whole kind of theme or thesis with these is that as the commodity's running, that kind of acts as like the ship, and then it drags the basket or like the anchor with it. And so you just want something like the commodity to be moving in one direction, and a lot of times the stocks will follow. And so as long as gold, which recently made all-time highs, continues to be bid, then some of the gold mining names might be in tow. And a good way to play that is with, for me, I'll be looking for possibly calls on things like GDX. And then if gold slams down for some reason, then this could be a decent way to play that unwind as well with puts. So that's all for me this week, guys. I hope that you enjoyed some of the content, and I just encourage you to really leave a comment and let me know what you want me to specifically go over in these scans. We do these scans for you and to add a lot of value to your trading. And so if there's a setup you want me to go over, if there's a question you want me to answer, if there's a guest you want me to bring on, just let me know in the comments, and we will do our best to make that happen. And we want Sunday Scan to be something that you look forward to every week and that you get a lot of value from. So whatever's on your mind, just let me know in the comments and we will make it happen. So that's it for me. I hope that everyone has a great week, and take care.